Hello everyone, PS from PS Invest plays here today. Since March 2020, Intuit Inc. stock has risen more than 240%, and year to date, it has risen 84%, easily beating all major indexes. Has the stock peaked, or can we expect higher stock price in the future? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott Wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Intuit Inc. Ticker INTU. Intuit Inc. is an American business that specializes in financial software. The company is headquartered in Mountain View, California. Intuit has built itself into a leading accounting and tax software provider for individuals, self-employed persons, and SMBs, small and medium businesses, through both internal development and acquisitions. Intuit segments its businesses into the small business and self-employed group, which provides software such as QuickBooks for accounting, payroll, and employee time tracking, inventory management, and e-commerce. The consumer group provides tax preparation software as well as TurboTax and Mint.com, which brings all aspects of an individual's financial life: income, budgeting, spending, cash flow management, credit, loans, investing, and taxes into one place. ProConnect provides tax preparation software to tax professionals and connects them with Intuit customers who need live assistance. Credit Karma, which was acquired in 2020, provides its customers with the most suitable credit, savings, and insurance products. The company closed its acquisition of MailChimp, a customer prospecting and relationship management system, on October 29, 2021. The Credit Karma and MailChimp acquisitions are game changers that expand Intuit's TAM, or total addressable market, and enable the company to add more value to its customers. QuickBooks grew its customer base by 16% over the last year to 5.3 million. Over the last year, it has improved and introduced new modules, for example, payments, payroll, cash management, capital, inventory, e-commerce, resulting in a 13% increase in ARPC, or average revenue per customer. As a result, overall SMB revenues and operating income increased by 16% and 24% respectively. International growth was even stronger. Non-US online revenue grew by 43% and ARPC grew by 23%. Despite this strong growth, SMB is still under-penetrated. Many small business owners around the world still do their accounting with Excel spreadsheets or pen and paper, which represents a large untapped market. Going forward, Intuit projects 10 to 15% long-term revenue growth in this segment. Operating income should grow faster than revenue due to inherent operating leverage. Over the last year, the consumer segment's TurboTax product user base grew by 6%, or 1.9 million net adds, to 45 million units in the US, and accounted for 31% of US Internal Revenue Service tax returns. Under-penetrated segments, including Latinos, investors, and self-employed individuals, experienced particularly strong growth of 20%. The average revenue per return increased by 8%, driving both revenue and operating income up 14% for the year. Over the last 10 years, the tax filing market grew 1.4%, but the do-it-yourself filing segment grew faster at a 4.6% compounded annual growth rate, and TurboTax outgrew the DIY segment at a 5.3% compounded annual growth rate. This segment is well positioned to continue growing as Gen Z new filers, mostly digital natives, are most likely to file taxes electronically. Mint.com, Intuit's personal finance product, is among the most downloaded consumer finance apps. It has 29 million registered users and 3.6 million active monthly users and handles 190 million weekly transactions. Mint.com helps consumers with their budgeting, spending, cash flow management, and credit loans. And it suggests ways for consumers to save more money and access the most attractive loans. Intuit expects consumer segment long-term revenue growth of 8 to 12%, driven by an increase in IRS returns, DIY category share growth, TurboTax market share gain, and increased revenue per stream. Operating income should grow even faster due to inherent operating leverage in the software business. Intuit estimates that 4 million do-it-yourself filers seek assistance from professionals every year, as their filing needs grow too complex to handle. To keep filers within the Intuit orbit, the company created TurboTax Live, a service to help connect people to professional accounting experts, who themselves are users of Intuit's professional tax software. The company presumably uses software algorithms to ensure a better match between a filer's needs and the connected professional's expertise. In its 2021 Investor Day, the company reported a 100% customer growth in the service, as well as doubling of new TurboTax Live customers who were not previously TurboTax customers. To retain the 10 to 12% of QuickBooks customers who outgrow the standard QuickBooks product each year, Intuit has launched QuickBooks Advanced, a higher-end product with the capability to serve mid-market businesses with 10 to 100 employees. It has also created a QuickBooks Live service to connect smaller companies and QuickBooks users with professional bookkeepers and accounting firms. The company reported a 57% year-over-year increase in QuickBooks Advanced users to 118,000, and a 4x average revenue per customer over the standard QuickBooks customer. On the QuickBooks Live platform, the company reported a 2x return in exports, a 3x increase in customers utilizing Live setup, and a 5-point uplift in retention for QuickBooks customers who utilized expert help in their setup, demonstrating the value of professional help. Intuit acquired Credit Karma in 2020 for $7.1 billion. Credit Karma began live providing free credit scores to consumers, but has since evolved into a free, advertising-supported credit and financial management platform. TurboTax users have accounted for 40% of new Credit Karma members, and there is the opportunity to introduce still more Intuit customers to Credit Karma. Furthermore, Intuit plans to offer Credit Karma money accounts to the 38 million TurboTax customers with an aggregate $105 billion in refunds and $16 million employees who are paid an aggregate $232 billion using QuickBooks payroll paychecks. Credit Karma's customer growth and average revenue per monthly active user has increased, driving 2020 and 2021 year-over-year revenue up by 37%. Management expects Credit Karma's long-term revenue growth rate of 20 to 25%, which seems achievable as it leverages Intuit's vast customer data to create more connections, that can both benefit customers and generate revenues for the company. In October 2021, Intuit acquired MailChimp for $12 billion. The strategic rationale for the MailChimp acquisition is to address customers' need to get more customers and sales, which according to an Intuit survey is the single biggest problem cited by its small business and self-employed customers. MailChimp is a simple but yet powerful CRM, customer relationship management system, which when combined with the QuickBooks suite of products enables Intuit to offer its small and medium businesses a powerful integrated accounting, customer prospecting, and relationship management system on a single platform. I believe MailChimp has the potential to transform Intuit from a SaaS provider into the league of best-in-class artificial intelligence-driven companies. Now, there are few risks with Intuit INC as well. Data privacy and risk of erosion of trust in case of a breach. Very high valuation. Intuit's current valuation of 55x trailing 12-month cash flow is high, even when compared to high flyers like Salesforce.com. However, expectations of strong growth from its Credit Karma and MailChimp acquisitions may keep valuation multiples up for near term. Apple and others have users with the ability to create fake, hidden emails to reduce spam, which may limit MailChimp's ability to run effective email campaigns. Renewed noise and pressure on the IRS and states to provide free online tax filing. Looking at the financials for Intuit INC, revenue, gross profit, EBITDA, net income, EPS or earnings per share are extremely good. They have been increasing quarter over quarter and year over year by a very good clip. In the chart on the right, free cash flow or FCF currently stands at $11.79 per share. Based on the current price to FCF ratio, the stock is trading on the higher side when compared with historical averages. In the chart on the left, earnings per share or EPS currently stands at $7.63 per share. Based on the current stock price to EPS ratio, the stock is again trading on the higher side when compared with historical averages. Finally, Intuit has grown by adding new customers, providing more value to each customer, growing along with the customers, and expanding geographically. The flywheel has grown larger and gained momentum. The company has grown and gained momentum, and the company has built a treasure trove of customer data. It can monetize by applying AI to create better outcomes for its customers. It is a high quality company, but its valuation is very rich. I recommend waiting for better valuation during pullbacks to accumulate a position. This is also indicative in the charts where I see the stock price to experience some pullback before it increases considerably in the next 3 to 4 years. Now, let's take a look at the chart for Intuit INC. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart for Intuit INC, the bull run that started way back in 2008 is still not over. It has completed its first 2 waves, and wave 3 is currently in progress. If we look deeper in wave 3, again, the first 2 waves are completed and wave 3 is in progress. After the strong run-up, I expect small pullback with strong resistance around $652.63 and strong support around $614.80. Please remember that this is not the end of wave 3. Wave 3 is still in progress. Wave 3 is typically 261.8% of waves 1 to 2, giving us a price target or short-term price target of $745.72. After this wave is completed, I expect wave 4 to resume, which is typically 38.2% retracement of wave 3, giving us a short-term price target of $572.71. After this pullback is completed, I expect final leg up, which is wave 5, to resume, which is typically 61.8% of waves 1 to 2, giving us a final price target of $984.24, which translates into a 70% profit in the next 3 to 4 years. Now, let's summarize. As I said earlier, the current price is extremely high. Nibble any pullbacks and accumulate corrections. For me, the accumulate range is a price between $614.80 and $652.63. I would recommend holding Intuit Inc for the next 3 to 4 years, as I expect a price target of $984.24, which translates into a 70% profit in the next 3 to 4 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.